Hello friends, this is Dr. Bhavdeep Ahuja here. I hope you are liking my videos on YouTube. Today's video is about a query which I received on my earlier posted video, whether a dentist should buy physical gold or digital gold. So a dear friend of mine actually asked me to put in some depth or details about the gold ETF, since those terms seemed alien to many of you. So I decided to make a video on little bit of detail on the gold ETF. So let's see what exactly it is. As I mentioned in that video, it is a kind of a mutual fund only, and which actually trades in gold. So it is actually a gold ETF or a gold exchange trade fund. The thing is that physical gold will never generate any income. It will continue to bite the dust in our lockers. So a digital format in the form of gold ETF is the one which actually gives an exposure to our gold in the market. We all know that our investment should consist of a mixed bag. Never put all your eggs in one basket. It should be a mixture of your mutual funds and your government schemes, but sometimes the average does not work out to be. So gold is an excellent hedge which tries to balance the lesser government schemes, and sometimes the higher riskiness we are not opting for that ways, and it tries to beat the inflation by being an hedge. So what exactly is gold ETF? I told you about it. The one gold ETF unit is equal to 1 gram of gold. So as the physical gold increases or decreases in value, so does the value of gold ETF. So you have to keep a close watch on your, say, investment done in the market, since it is a kind of a mutual fund only. There are quite a few advantages of gold ETF, primarily the first one being the flexibility part. It can be purchased online and placed in your demat account. There is no lock-in in this. You can enter or exit as per your wish and will. Obviously, there will be some brokerage involved into this. Your asset management company or the AMC will actually trade them at the stock exchange price. The second advantage is the liquidity. You can trade them for liquid cash as at any given point of time during the trading session in the stock market. So the third advantage is you can actually control the amount. If you go to a jeweler, you have to shell out sometimes a higher amount. Otherwise, unless you are buying a gold coin or a gold bar. So otherwise, you can enter with with as little as 1 gram of gold. So as I mentioned, 1 gram of gold is equal to 1 unit of ETF. The fourth advantage is the transparency and the ease. It is actually a very transparent system, and you can actually make profit at will and wish, sometimes I can say. Then the fifth advantage is that you can hold on to your gold ETF as long as you want. There is no cutoff or a long off or exit period in that. And of course, there is no risk of this being stolen. And obviously, the storage will be in the demat account only. But they come without any wealth tax burden. Then the sixth is their tax efficiency. Yes, there is no wealth tax, there is no VAT, sales tax, or any other tax which are applicable when you buy it from jeweler. But yes, like mutual funds, these are subject to short-term capital gains and long-term capital gains. And the long-term capital gain scenario is similar. Anything above 1 lakh is subject to 10% of the gains above 1 lakh. So that will be there. So as I mentioned, there will be no making charges in this. So you can purchase at international prices as well. So all in all, an advantage, except if you look at the tax part, these are not tax free like the sovereign gold bonds, but they do attract long-term capital gains. But otherwise, they have no other hidden charges on them as well, surely. So as you can see, there are a lot many advantages with gold ETF. Yes, everything would have some disadvantages and advantages. If it comes to gold coins and bars, we know slight making charges. Yes, a slightly heavier investment, especially if it is a bar. When it comes to ETF, yes, there are LTCs applicable, otherwise no other hidden charges. When it comes to sovereign gold bonds, yes, their scheme is lock-in period is 8 years, but you can redeem anytime after 5 years. Between 5 to 8 you can redeem anytime. The absolute lock-in period is 5 years. Yes, there is a risk that what you are getting at 6 years or 7 years, you might not be getting the same amount at 8. But then you have the full flexibility. The luck will matter. In this case, the additional advantage in SGB is that you get an annual interest of 2.5%, which is again slightly taxable as per your slab, but still roughly 2% over and above your capital gains, over and above your total wealth of investment in SGB is good enough. And in SGB the returns are absolutely tax free. So every option, either it is a ETF or a gold bar coin, or if it is a sovereign gold bond, they all come with a set of advantages and disadvantages, so you can choose as per your sweet wish and will. So I hope this query was answered. So kindly do subscribe to my channel. Channel is a payback to my profession. This is exclusively for all doctors and dentists, all the healthcare colleagues, because we are getting no formal education in finance and practice management and medical legal as well sometimes, on which my all videos are based. So thank you so much. Keep watching this space. There will be a video soon, very shortly once again. Thank you.